Good day, everybody. This is Dennis Wilbur, and I'll welcome everybody to the Art and Science of Active Trend Trading Update. This is the weekend of November 4th, 2018. Welcome to the last 2 trading months of the year. Let's get going. All materials presented are for trading purposes only. Traders should always paper trade any new method part of the risk of their own personal capital. So, our objective with active trend trading has been my objective since the very beginning. Basically, I had to learn how to trade when I was working full-time, basically 10 to 12 hours a day, 6 to 7 days a week. I was teaching myself how to trade at that time. My heart went out to, I swear if I ever get to the position where I can provide a clearer and simpler approach to trading to give people an opportunity to basically multiply their accounts at a greater, if they'll just spend the time to learn how to do the system, that's going to be my objective. And that is my objective, continues to be my objective. I continue to try to clarify, simplify, so we can all multiply. The Art and Science of Active Trend Trading, the intention of this webinar and this video is to basically provide an update for accompanying the post to the website. I talk about market technicals, potential bonus setups. I've honed in a couple of bonus setups that I kind of like and will be looking at continuously moving forward. I want to provide a couple more bonus setups through the end of the year for members who just basically are free. They just get the newsletter. That's all they get. They're not premium members. However, we're going into a time of the year. I'm going to make an offer at the end of this presentation where you can save 40% off of a membership to Active Trend Trading. It's a monthly membership. Try it for a couple of months. See if it doesn't enhance your trading. And the thing about it is, it's also really great is we're going into the time of the year where we anticipate a move to the upside. And would it be nice to get those text triggers telling you exactly where I'm getting into particular positions, therefore, trading parallel with me, enhancing and increasing the probability that we can do well going into the end of the year. So we take a look at also other driving events. I spent a brief amount of time going over some technical or mechanical tip. Today I'm going to be talking about be proactive at reactive action points. We'll be covering that. I'm going to cover that right now. So what the heck does that mean? Be proactive at reactive action points. That sounds like a bunch of gobbledygook to me. Well, it did until you look at a chart. Charts are continuously going through an ebb and flow. Matter of fact, especially with the Magnificent 7 ETFs that we're trading on a regular basis, which is 4 sectors ETFs plus 3 index ETFs. They move. They go like a wave in the ocean. The problem is it's like the surfer out there. They want to see the waves coming to them. They know when the time their entry where they can get onto the wave and then let it ride in all the way into the beach. If their timing is off, basically they either wham, get wiped out, and or the wave comes crashing down on them, and guess what? They, in some cases, if it's drastic enough, they could actually die. So we want to wait for the reactive moves. What the heck does a reactive move look like? Briefly, what happens with the majority of traders in my thought, from what I've seen, is if the underlying entity is continuously doing this, a thrust up, reaction down, where it's made up of the longer-term uptrend, and these thrust and reactions happen all the time. Longer-term downtrend, these thrust and reactions happen all the time. However, I don't know if it's psychology, I don't know if it's just poor training or what it is. The traders tend to get in here, and they get in here expecting a pullback, and then what happens is pullback goes against them. And it's very uncomfortable to watch what you thought we were so excited. This is going to be so wonderful. This stock is going to go to the moon. However, you get in here, the reaction happens, you start pulling back, you're losing money, and oftentimes they'll tend to get out about right there. That's poor timing. Basically, if we can recondition ourselves, re-educate ourselves into being proactive at reactive action points. Where are those action points at? Well, if you're in an uptrend, I want to be buying where? Not here. I want to be buying there. I want to be buying the entity itself, the stock or the ETF. I want to be buying call options and or selling put credit spreads. Same thing here. Then we go into a sideways move. A little bit wonky up there, but we can still level ourselves out between support and resistance. It does identify itself. What do we do here? We've now gone into a downtrend. We want to be, and these patterns repeat themselves over and over and over and over again. Here, I want to basically be buying puts to the downside, shorting the entity that I'm trading, or with the leverage ETFs that have the inverse, I can actually be buying the inverse because it will go up as the underlying goes down. So what else? Call credit spreads. In other words, I'm selling a call credit spread, taking the credit, writing it down here. There's the other point I want to be able to get into. And then oftentimes you'll read down here at the support level where the process restarts all over again. Those time frames, they turn out on monthly charts, weekly charts, daily charts, and intraday charts. And so part of it is just to become cognitive of what's a thrust, what's a reaction, how do I plan my action. Here's a perfect example. And this is one of the Magnificent 7 ETFs that we're trading with the premium active trend trading members. Get triggers on this. This is over a couple-year period of time. Look what happens. 9 weeks, 79%, 9 weeks. And again, this is from a thrust, reaction move down, thrust up, and it's basically planning your trades at these lower levels. Reaction move up. So this is a thrust move up, thrust move up, thrust move up after a reactive move. At each one of these points here, that's the reaction action point. Last one for the year. Now, of course, this has gone on from here, from October, and is actually down here now. And so now we're looking for, this is going to give us an opportunity to do something on the other side. By trading both the leverage ETF that offers both a bullish perspective and an inverse that provides, when the bullish side no longer works, you can still trade to the upside, trade using the bearish side. It can give us some opportunities to be in the market and just taking these thrust and are taking this reactive moves, reactive action point. We do that. We're going to capture all that? No, probably not. However, if we could just capture half of it, 2 moves, that's about 2 moves per year. If you could capture half of that, would be, let's say, 35%. 35% twice a year on the majority of your capital. Would that change your life? For me, I know it would. And this is where we'll be focusing with the active trend traders through the end of the year to get us so honed into doing this that we can just repeat it year after year after year after year, so that our trading becomes very clear and simple, and to some cases boring. Every week I do provide the various watch lists. Here's the composite list. This was the number of stocks that came up on the 13 different IBM watch list. I call this the composite list, and basically what it does is it shows beat was the number 1 ticker, showed up on 6 watch lists, rated number 1. Now, same thing, and I'll just throw out, now it's looking pretty good in CHD, if you want to take a look at those, but those are provided to members who are at least the free 3 active trend trading members. You get access to this these watch lists, 3 different watch lists every week. So seasonality, I do want to keep a look at that. Okay, our seasonality has moved to the right, of course, because we are now past October, moving into November. What's oil tend to do? Oil tends to drop. We want to be prepared for that. One of the active trend tradings, Magnificent 7 ETFs covers oil. And we can cover and we can basically trade oil no matter which way it goes. Same thing, Russell. I'm anticipating this move from here in November for a good rally into the end of the year. Again, for our premium members, we will provide the specific triggers for these. And then last but not least, our market action point. We're going to be basically launching this. We did a pre-launch special for the already existing early warning alert members in October. We'll be putting together a secondary launch to welcome as many people as possible at a very discounted price point so that you can be a charter member of the active trend trading system, of the market action points system. And what I really like about this is we have done a thorough back testing and started working and trading this. We're getting less whipsaw and more trades. So if you have any questions, contact me at, here's my email. Also, look us up on Facebook, facebook.com, Active Trend Trading, and you can do some interaction with us there. If you want to leave us a message there, you'll probably get it answered quicker than sending us an email. But please, if you do go there or you go to the YouTube channel, please like us, please leave comments so we can have a dialogue and interchange. Always looking for great trading stories. And so that's basically, I want to look at a couple of charts here just to throw out some additional ideas for you. There we go. Okay, and then I'll have one slide to wrap us up. And so again, I'm talking specifically, let's take a look at the S&P. The S&P is bouncing as we see here. You know, I've been talking about those thrusts. Well, what have we had here? We've got a thrust down, a reaction up, thrust down, reaction up. Knowing that and being able to draw that lines, we know that the S&P is in a downtrend. We have reached up and we are at a level of resistance. So what's our next potential move, or our, you know, the good probability that we're going to get a move? Which direction? Well, the probability is somewhere in here. You know, here's the 200-day moving average. Here's the 20-day moving average. Somewhere in there, we're probably going to get its next thrust to the downside. Now, if it maintains symmetry, that next thrust to the downside will probably take us down to, I would say, about 2,500, somewhere in there. Now, if that happens, will that put us into a bear market? Well, the answer to that question is, I don't know. Let's just drop it down to there. The answer to that question is, no, it won't. It will put us only about 15%. How far does the S&P have to drop before it's actually in a bear market? Well, all the way down to about right there, about 23.25 puts us in a bear market. So keep that in mind. So we're not quite there. Secondly, let's take a look at the NASDAQ. I can just leave the zigzag is doing the same thing. Again, thrust down, reaction up, thrust down, reaction up. We are at a potential reaction action point to take a downside trade. So just be aware of that. We can see here from this long hammer type candle, bullish engulfing, bullish harami on a weekly chart, that it's looking for a place to turn around. Does that have to be here? Could it not go further down? It certainly could. So just keep your eye on that. How far did we drop? Okay, the NASDAQ actually dropped down to about 14%. And so how far does it have to go to get its 20%? Again, that's to be the definition of a bear market. Probably about right. I think I marked that before. Yeah, right there about the 62.48, 62.40 level. So, and as you can note, there's a really strong level of support right there. So even if it pulls down into what would be classified as a bear market, it's probably not going to spend too much time there. or that may be the zone where it does its little bounce thing. Let's see, Russell. Russell looking pretty good. From the aspect of the Russell looks pretty good, and I say that with the aspect of it reached some of its lower levels more quickly, has a much better bullish type candle for the weekly chart. Look for a pullback. I would say look for a pullback. Is it going to pull back to the 8-day, which is about there, 1522, and then bounce from there? Or is this just, again, the classic thrust, reaction, and so it's going to do another thrust down to the downside. And where might it go from there? Well, we could, let's just take a real quick look here. Where might it go? We would basically want to grab this level here. So if I grab this, thrust from here to here, pull it over, activate it, pull it over to this candlestick right here. And you can see that could set us up for a potential thrust down. This is just a target down to the downside of where? Well, guess what? Right there at the past support, about 1440, 1430. So that's what, and where would that put us as far as dips on the S&P, on the Russell? Well, Russell hit 16%. If it hits that level here, that would be 18. I think about 14%. Yeah, about the 1400 level would make the 20%. So just, that's just an idea. Keep that in mind. I will throw out conceptually what we're going to be doing for the active trend trading premium members is we're going to be trading a lot more of the index ETFs and the 3-sector ETFs. And again, if you want to trade those with us, now is the perfect time to jump on board and trade and become a premium member and trade those with us. What am I looking for here? As you've seen, we are getting ready to move into the end of the year. And so we want to, I wanted to just look at one potential MTCH match. Match was looking kind of good. I think it just did its earnings. No, it's got earnings coming up, so never mind. But as you can see, look at that. Thrust down, react up, thrust down, react up. In reality, if it didn't have its earnings, we'd be wanting to take that to the downside. Earnings on 11.6. So I'll probably wait on match to see if we will get a turn on that. The other one we may want to keep an eye on for is Paycom. Paycom already had earnings, finding support. I like Paycom from the aspect of somewhere between this 118.41 and 114.98, 115. That is strong breakout support. So if this rolls into and this is what I was saying, it appears like this is a cup that is kind of reaching towards the midsection of a cup. And we're going to spring load back up to the upside. So I'm liking Paycom. So I'll leave that as a potential look for a bonus trade on Paycom. So let's finish up. Keep our session short and sweet for today. I want to remind you, this time of year, I want to bring to your attention just that I'm going to give a last chance special. So to be ready to trade into next year. And why is that doing that? And what it is basically I want to provide you an opportunity to join active trend trading right at the end of the year with a really good 40% discount, $44.99 off a regular price of $74.99. In January, the price of a membership in active trend trading is going up. It is going up to a regular monthly price of about $124 to $130 per month. If you act now, you can lock in the $44.99 for as long as you're a member. And that's one thing I always have made a commitment to the members of Active Trend Trading. I will never raise your membership as long as you don't let your membership lapse. And so we have some members who joined back in 6-7 years ago, and they are still members paying what they paid 6 or 7 years ago. So again, that's a commitment I make to you. And so if you want to join, take advantage of this great discount rate. While I may offer specials after the first of the year, but you're not going to see prices this low again. So if you are, go to this website right here, activetrendtrading.com, premium-membership-special. You have to have a password to get into this because I am not offering this up to everybody. So there's the password bonus. And so you've had to watch this video in order to get this. So until next time, have a great week, everybody. Looking forward to just an absolutely fantastic November and December with some big gains. We want to just continue to be more prosperous moving forward. God bless everybody. Aloha. Have a great week.